welcome to the Closing Beat, everybody. Happy Tuesday. Hope you're having a great day here today. This is just a quick show that we do, stock market update. We call it the Closing Beat. We're financial advisors here at Jazz Wealth and just enjoy sort of keeping track of the day-to-day markets. I'm fascinated by them. I love studying them, and I like to bring a lot of that stuff to you guys. So hope you enjoy. Hey, we're playing a game. If you go to the website, bottom right-hand corner of your screen, there is jazzwealth.com/guessthedow. Take a guess. Where do you think the Dow is going to finish next week? And if you're right, we'll send you $100. If you're one of our customers, we'll credit your account if you like, or we'll send you the $100 as well. You don't have to be a customer. There's no strings attached. You've heard me say this day after day. No games, no marketing, no email, spam, nothing like that. Just a fun game. Let's have a good time with it. And so far, we've had 2 winners that are not customers. This will be the 3rd week. Let's see how we do. Anyways, this Thursday, by the way, also, if you're one of our customers, we're going to do a class, a little geeky, right? Sometimes I do the geeky stuff, on the stock market's loss statistics and overall asset class performance. So I'm just putting final touches on some slides I want to share, like 5 slides. I'm going to keep it real short, but the goal is to teach us something new. So we're teaching financial advisors. We love to teach our customers, and every single Thursday, we do a class for them. Just to teach either something new, something that everybody's stuck on, or a new tip, a new rule change, things like that, to sort of help out. So if you're one of our customers, I hope you'll join us. You'll get an email here tomorrow. Actually, we'll be sending them out. Let's look at the stock market today. You got some action. We weren't supposed to see much action until the end of the week, and we're getting started a little bit early. I like it. You got the Dow down 179 points, 27 on the S&P, 120 on the NASDAQ. That was your underperformer today. We'll cover that here as we go. Early this morning, consumer confidence. We talked about this yesterday as being a number that was coming out. It missed by a freaking mile, like a big miss on consumer confidence. So I like to really get into the details of these econ numbers. I don't know if you care or not, but I'll give you a little touch on it. December was the last time we had a spread that was so bad between what we were expecting and what consumers actually felt. That was the last time. That ties 2011 for the worst on record. So gives you an idea of how far of a miss it was. And what I mean is, like, we expect a certain number and we come in less. It's like earnings, right? You expect $1 per share, you come in at 50 cents, beat by 50, or a miss by 50 cents. Just horrible. If you dig into those numbers, the way they break those numbers down is how people feel about the current economic environment and how people feel about the future economic environment. They ask the same people the same questions. And that's tracked as a spread. We like to see if people are positive about now and positive about the future, you'll see sort of a tighter spread. That spread has really widened out here recently, where people are less optimistic about the future, but they're sort of okay with how things are going right now. So both of those instances ticked lower here in this last reading. Not good. It kind of makes sense, though, right? You see the financial media. They're talking recession, yield curve inversions, Trump's crazy. You got the trade war thing. There's always something negative out there because it gets you to watch, right? If all I did was talk about negative stuff, I think I'd have probably more viewers, but you guys would be more combative, right? It'd be a whole different audience, and that's not my style. Anyways, this week we got the G20 meetings later in the week, and then we have the official meeting of President Trump and Xi happening on Saturday, and that convenient over the weekend, not during market hours for China either. So I think investors mostly are looking for as long as there's no, like I said yesterday, no complete collapse of talks, then I think it's okay. So that's basically all I have to say about that. We'll see what happens, of course, and we'll keep you posted. Remember yesterday we said, hey, today you got 5 Fed members speaking. Remember why they do that? They go out there and they try to guide you going forward, so when they make their rate decisions, it's not so shocking. Well, they guided everybody today to basically say, we're not cutting rates. Right? We're not going to use this short-term nonsense to cut rates. President Bullard, I forget if he's out of Dallas. I forget where he's from. But one of the Fed members said rate cuts are basically off the table. It's too early to cut rates, and this whole nonsense of people wanting a 50 basis point rate cut is absolutely absurd. Wasn't going to happen. His exact words were, I believe his exact words were, a 50 basis point rate cut is off the table. So investors sort of respond to that. Remember, a lot of people thought there was going to be at least one rate cut by the end of next month. So the Fed's sort of trying to get you guys thinking out there, we're not going to cut rates. Remember, you don't want them to cut rates, by the way. So I was pretty excited about, what came out today. 5 Fed members, there's still, I think, one more to go. I believe that's Mr. Powell. We'll see what happens there. So let's go over to the charts and take a look here what we have. You got the S&P 500 pulling back here about 1%. Okay, right? It's totally okay. We've been prepping you for that because it's totally expected along the way. Remember, we said the leaders have been sort of defensive stocks, but the leaders have been REITs, they've been utilities, they've been healthcare. And remember yesterday I said, what happens if those areas take a break? Wouldn't the markets tend to take a break because the other areas of the markets are underperforming? So exactly as we were sort of helping guide is what's happened. You had REITs pull back today. They pulled back kind of nicely over the last couple days. 1.3%. That's been a leader. What happens when a leader no longer leads the markets higher? The markets tend to pull back. I feel like I just said that. So utilities pulling back over 0.5% on the day as well. They've been a leader to the upside. If you've watched the show for last couple days or even weeks, you know I've been sort of plotting this along little by little, keep you updated. Healthcare also pulling back. Nothing wrong with any of these sectors pulling back, by the way. It's a healthy sort of exhale in the normal breathing of the market. So I have no problem there. Now the problem with today, a lot of the relative weak areas like communication services. This has been struggling to get back to highs. I did the whole analogy yesterday about your 401ks maybe not hitting new highs. Well, today when that pulls back, you have the sectors that are already a little bit weak. They're pulling back as well. That tends to make most people want to take some profits in the short term. You had the tech stocks. I'm going to cover some of these in a second, but those pulled back pretty sharply today, at least one of the bigger moves we've seen recently. And oh boy, retail. XRT is the one we put here in the dojo for you to track. It's right over here. If you're one of our customers, you can come play along with me. You're free to use this, of course, as much as you like. So down over 0.5% again today. Remember, that was one of the weaker ones yesterday, okay? So we'll move on. Did you notice the blow-off top in gold? You think gold's going to go any higher? I did a video earlier today on is now the right time to buy gold. And I was essentially hinting at, no, it's not the right time to buy gold, but I'm not allowed to actually say that. So I was hinting at it, just to be fair. Here's where we're at. This kind of be my focus here for a minute. If you follow the gold futures contracts, or maybe even GLD if you like to play along that way, the gold futures contracts are now 3 standard deviations, just a touch over 3 standard deviations away from their 50-day moving average. If all of that is super geeky talk, then you can look at some kind of indicator. Now, let me just, here's the lesson of the day, right? I know a lot of people use stochastics, MACDs, RSI, all those indicators and oscillators you could put on your charts. I've studied every single one of them. And you know what happens is, it boils down to who's using those indicators on what stock, asset class, sector of the market, index, whatever it may be. Well, here's your lesson. In the gold markets, gold futures markets, the most popular thing that people follow is the RSI, Relative Strength Index. So I'm going to give you some data on that one as well. If you look at the RSI, the 14-day RSI, if you're familiar, if not, bear with me. 30 seconds. 14-day RSI is above 85. Well, if you look back in history and look at the studies that people do on gold, physical gold, they actually study this. If you go back to 1974, the average decline after the RSI on gold futures it hits 85 or higher, the 3-month performance, you know what it is? Negative 18.3%. Means when gold gets that sort of overbought, it pulls back sharply and sort of brutally over the next 3 months. Over the next year, it averages a loss of almost 20%, right? If you use the 3 standard deviations like we talked about just a second ago, anytime, or the average rally or decline, anytime gold moves outside of 3 standard deviations above or below, the average move is just about 3%. It's 2.98%. And that's only in 3 days. 3 days, right? So what does that tell you? All that geeky numbers, if you don't care about all that stuff, what does that mean? At the end of the day, it means you're about to get a discount on gold of at least a little bit, maybe even more. So there's no rush to really dive into something that everybody else is diving into. If they don't know those stats, they're about to see themselves maybe lose a little bit of money, which is good for those of you that want to buy gold. So I'm not against gold. If you find that fits your goals or you just like trading it or whatever, not opposed to it, but understand where it's at. It is currently overbought, extremely overbought. So I don't even need to give you my opinion. I just give you the data, and you can take with it what you will. GDX, gold miners. These are, like I said yesterday, this is the most overbought area of the market right now. It's so far overbought that any indicator that you use, it's like it's like falling off, right? So you have to pick it up and put it back on. So it gives you an idea of what's going on there. It did pull back today nicely already. You have more profit takers than you do buyers. Remember, we said that yesterday. That's going to change. The number of buyers will dry up. The people that want to take their profits will get excited. Nothing wrong with a pullback. I have nothing wrong with it, but just know what you're getting into. The dollar was also a little higher today. It wasn't very impressive, though. It's been a pretty steep drop here for the dollar. We use UUP, which happens to be in the dojo as well, and a little bit of a rally there, but I don't think many people expect a super, super strong recovery in the dollar here, at least in the short term. We might start covering that more because there's a lot of lessons inside of that. Oil. The actual crude oil contracts broke through the 50% recovery mark for the month of May. It's just a fancy way of saying, look, from in May, if we go right here, right there, if you take the high of May, right there, all the way down to the low, the recovery here now has almost, or in the ETF, it's almost recovered 50%. In the actual crude oil contract, it has broken through that 50% recovery area. Maybe that's just something you like to know, or maybe you consider it resistance, whatever you do. I'm just going to put it there for you. In the S&P 500, you got 60% of the stock still over the 50-day moving average, only a small downtick there because today was down day. So I think you guys pretty much understand that. 27 new 52-week highs. It was mainly utilities, some healthcare. You also had those insurers in there. I keep pointing these guys out. You got Travelers hit new 52-week highs, extremely strong in the short term, or over the year so far. Hartford is another one that made new 52-week highs. Very tight and controlled uptrend, and a little different category here, but Lowe's, not Lowe's the home improvement store, Lowe's the insurer of whatever. So those guys kind of sticking out as making new highs there. Also, I'll point out Starbucks. If you are a Starbucks fan or own Starbucks, it did poke to new highs, but succumbed to the market pressure today and did pull back. Still a positive day. It is a little extended here in the short term. I think if Starbucks pulled back, nobody would really mind. All your 52-week lows, almost all of them were services based. I don't know, better word to say that. You had Kroger hit new lows again. I only point these out because I know some of you like to buy the discounts, and I know some of you like to short the discounts in the short term, and you believe they go lower. Whatever works for you is fine with me. I'm just pointing it out. Carnival hit new 52-week lows today, and then Kohl's came back and hit the new 52-week lows. Pretty much been stuck there. That is not a waterfall drop by any means. If you want to see a waterfall drop, go to the futures market. The E-mini S&P futures last night between 10 and 11. There's your waterfall drop on a 5-minute chart. Something you want to check out. That may be more than you guys want to know, but I like it. All right, FANG stocks. That was a lot of weakness today. Tech, right? FANG stocks, you got Facebook down 2% on the day. You had... well, let's just follow along with the acronym there. You had Apple lower by, 1.5%. Amazon, you getting the sort of vibe here today where things were just going to take a break. Amazon down almost 2%. What do we have? Where are we at? Netflix would be the N in FANG. There we go. 3%, although Netflix is just, you notice how it's not making any headlines right now? It's not doing anything. Right? Everybody's going, ooh, gold, ooh, Bitcoin, wow, ooh, look at the dollar fall. So there's all these different areas. Netflix is just snoozing here sideways, and so that's why you don't really see it in the news. That's a great example of one where the next real big move come from earnings. That's where you'll be back looking at it. And Alphabet, which is actually Google, if you type it in there, so that gets to count as the G, down today as well, 2.5%, and notable resistance area there. So if you happen to own either Google or Alphabet, you got a little bit of pressure coming your way, and I think it's okay, but you just know you got a little pressure. Micron reported earnings after the bell here. They beat on earnings, beat on revenue. Huawei makes up 13% of their overall revenue, and they basically said, doesn't matter. We're doing all right. It's not really hurting them that much. And remember, Broadcom, which is symbol AVGO, that was the one where $2 billion in revenue comes from Huawei. So remember that one, they got some splaining to do. FedEx also reported earnings and decided they were going to sue the, did I type it in wrong? FedEx. There we go. So FedEx beat on earnings. Revenue came in as expected. Guidance was basically flat. They'd already lowered guidance. That's sort of a side topic. And they're suing the government. They're saying, hey, man, we can't be responsible for trying to block these packages. You know what kind of logistics nightmare that would be? So they're suing the U.S. government. I thought earlier maybe they put that out last night to try to distract from their earnings, but all in all, it wasn't that bad. Remember, with FedEx, guidance is usually really important because they're supposed to have their finger on the pulse of the global economy. So people look to UPS and FedEx to see how they're doing as sort of a barometer to the overall economy. Not too bad, apparently, there. All right, that's all I have for you as far as, that's all I have for you. We have covered everything I'd like to cover today. I'll take questions if you have any while you're asking those questions. You got Apple hiring 2,000 new people in the Seattle area. You feel like moving to Seattle? Hopefully they pay a lot. I hear Seattle's expensive. Lennar beat on earnings. Unfortunately, the bad home builder news came out today, so that didn't really help them. Iran says, hey, no diplomatic path to sort of any peace there, thanks to the new sanctions the U.S. has put on them. What else do you expect? I mean, that's sort of normal. Tomorrow you have earnings from General Mills, Paychex, and KB Homes. So if you're interested in that, we'll be on the lookout there. I want to cover one other thing. Was it in the S&P 500? MKTX is going to take the place of 3L, which is Lumber Liquidators, is it? No, it's L3, dummy. So MKTX is going to take the place, if you're an index investor or you like replicating indices or whatever, MKTX replacing L3 in the S&P starting, what's that going to be, Monday? Starting Monday. Also a lot of shifting going on in the S&P 600. You want to pay attention to that if that's something that you like to build. If you just buy a fund or something, then no need to make any adjustments. You may see a little variance there in your ETFs or your mutual funds. Dividends ex-payment date for Cypress Semiconductors, 11 cents. Hey, man, I'll take it. I love it. Okay. What do you think of Alibaba? Purchased some call options. It got killed today. Ooh, buying call options. What was the strike price on that one? Give me a head. How'd you get killed today? You must have bought some, I want to say like 170. Help me out, music production. I'll come back to your question. But if you got killed today, I don't see any volatility, too strong a volatility decline there. That's not a big move. 175. Oh, it was close, man. Okay, so you buying out of the money calls. Yeah, you're in trouble. Yeah, careful there. Careful, careful. Anytime you're going to buy calls, go at the money. Everybody always wants to go out of the money because they go, look how cheap this is. You essentially, let me see if I can help you real quick because I really dig this sort of thing. Your chances now of making even 1 penny worth of profit. I'm not picking on you, by the way. I'm assuming these are in the July monthly expirations. 175 calls. They lost 82 cents today. Did they? Yeah, you got like less than a 30% chance at this point. I don't have it on my screen. Not looking good. You need a sharp rally, and preferably tomorrow in Alibaba. Now, the beauty is you've got, if you're familiar with that sort of pinch between the 50-day and the 200-day, you got a chance that it could recover there. You got a lot of technical interest there. So, I'll wish you the best there, but you're gonna need some support like tomorrow for sure. Yeah. Could there be some more downside on AbbVie? Yeah, I don't follow the biotech sector too much. I see what they did today. They bought Allergan or whatever it was. I don't follow that. Here's general rule of thumb, though. No matter what the news is, we could take the news out of it. If you look at a stock and I'm going to pull it up. You look at a stock and it is making the first major move to either change direction or start a new direction, you don't try to bet on that one. Simple explanation. This stock is going sideways. Not really anything is happening. Out of nowhere, it starts moving lower. You don't want to do anything after only one day. If, for example, the stock was moving lower, right, and it rapidly changed directions, right, and had a really big up day, it's tough, but you don't want to do anything on that first day, right? If the stock is moving higher really, really, really sharply, and then it starts to reverse all in one day, you don't want to try to buy that thing on the first day, in other words. So I don't know if I said all that right, but never do anything after only one day's new move. Very difficult. Yep. Very difficult there. Detlef says it's hard as a new investor to decide if I should take some U.S. stocks in addition to my S&P with the G20 coming up. I think everybody's going to be in that wait and see mode. There are these moments in time where there are Fed meetings or important economic events, elections and things like that, where people go, I'm going to just sit here for a second. I'm not going to do anything. And there's nothing wrong with that. Issue there is if you have an index fund, then what's the reason to have additional stocks? What are you trying to do? Because a lot of times what happens is people go, I'm an index fund investor. That's all I'm going to do. And then they get kind of excited about the markets. They start buying stocks where they're totally offsetting what the index fund's supposed to do. Unless you're really good at it and you could pick good stocks, but you're giving up the average that you were willing to accept. So it'd be something we could expand on if you're interested there. Yep. Detlef, there might be a gap up tomorrow with the opening of the markets. Oh, up or down. Honestly, when the market sold off last night, I was pretty excited about that. Now, the morning's news didn't really help us here, but if we could start the day lower, I always take those days. Any day where the market starts the day lower in an uptrend, I get excited. It just gets more people excited, I think. So we'll see. Yeah, we'll definitely be there. Carnival Cruise making new 52-week lows, and you want to buy that? It is extended in the short term, so there's an argument to assume at least sort of like even if it's a dead cat bounce or just a sharp little 1, 2, 3 day thing. If you're a dip buyer like that, it's a hard argument to make a long-term investment play on this one. So if you're an active trader, I could understand if you told me you bought that at 45 or it fell tomorrow and you decided to buy that dip. I could understand that strategy. I can't tell you what to do. Yeah. What do you think about thrift savings plans versus moving it to? So thrift savings plans they're the best retirement account you can have. And I'm not saying that because I offer them. I can't. I'm just saying that because it's the truth. They're the best, lowest cost. For someone that is a passive investor that has access to that, you got to take advantage of it. Changing it to a Roth, unless you mean like the Roth TSP, if that's an option for you, what's the point, right? You're moving money from a TSP into, say, a Roth IRA. You're going to pay all the taxes for what? Why would you do that at market highs? Wait till the markets fall, and then maybe there's a better argument. I know it's attractive, right? Because tax rates are a little bit lower, and I get it, but I would try to hold off there if I were advising you, which I'm not. You guys get me all like, say stuff I shouldn't have. Cool. Okay, so I believe I've covered everything. Let me check my sheet real quick, and then I'll wrap us up here. I did. I covered everything. You like to play a bit with the short and midterm stocks in addition to your ETF. So Detlef, keep them separate. You likely have the index fund, I'm imagining, in some sort of retirement account that you manage or whatever. Could you do a separate account? Could you, even though I get it, it's a taxable account and everything, but could you keep your active trading separate from your long-term investing if it's not too much of a headache? That's how I do it. I would prefer that most people do it that way. And plus, it's kind of fun. You get to compare the buy and hold strategy to your active strategy, and you could see over time, do you do better? Is it better to just hold and take the average of the index fund? So it could be kind of fun, If it's all in one account, it may be a little tougher to track, That might be fun. As long as it doesn't cost you anything, or you're not signing up for extra fees or anything. Yeah, why not? Okay, that's all I have for you. I really appreciate you guys watching. I'm going to wrap it up here. Back to work for me. And of course, we'll be back tomorrow to do this all over again. What is tomorrow's video? That we'll post at 1 o'clock. 4 ways to prep for a recession. Ooh. Going to dig a little bit deeper on that one than some of the past videos. Do you think a recession's coming? And if so, what should you do about it? Right? Has nothing to do with your investments. I'll give you that. That's only number 1. There are 3 other things you could do. We'll check it out tomorrow. I hope you enjoy. And see you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.